morning, everyone. We're going to do a class today and talk about different types of lenders and different types of loans. I have Miss Tina here with me. Let me set this up on a slideshow so it's easier for y'all to see. And I'm going to cast it up on the screen so she can see it as well. So hang on just a quick second. I thought I'd done that, but apparently I hadn't. Hope you all are doing well. Everybody seems to be getting very, very busy. I love that. That's very good. I know Brownie said he had multiple appointments today, so he's not going to be joining us. And so just keep busy. I had sat last night with Miss Lillian. She's not with us right now. She had some stuff at school, but I went over some opportunities with her last night on a little mentors call that we did. And I wanted to share them with y'all as well, because I thought they were some pretty good points. Everybody knows that the tax assessments have just come out for Denton County, all the counties here. And so people are really up in arms about that. So it's a good opportunity for y'all to get out there, talk to your friends, family, neighbors, whoever, and let them know. I'm sure you received your tax status by now and your appraisal for next year. If you would like a CMA or help to dispute it, I would be happy to help. That's a great way to get into the door, people. So get out there, start talking to people and offer them your services. And if you're not sure how to do a CMA, if you don't have access to MLS, I know a few of you don't yet, just let me know and we can do them together, or I can get you a login, temporary login or whatever, and we can get that going. But that is a good tool for you guys to get some potential business. It also keeps you fresh and helps you practice your CMAs and stuff. So it's all around a good way to move forward on that. So take advantage of the tax appraisal letters going out and the increases, and go ahead and get out there and schedule some appointments. Okay, we have a special guest today. I'm going to turn it over to her here in a second. It's going to be Miss Tina Shoemaker. She is with American National Bank and Trust up in Denton. Here's all of her contact information. Angelica, thumbs up if you can see everything. Okay, good. Okay, so here's all of her information, and I'm going to kind of turn it over to her. She's going to tell us all about her and her company, and we're going to talk about different types of loans, all that stuff. So when you go to do down at the bottom, there's this. Okay, here she comes. We'll just switch chairs.
Hi, everybody. Thank you so much for having me today. Again, I'm Tina Shoemaker with American National Bank and Trust. My husband and I recently just moved here to Texas in September, and we are loving it. So I am new to the area, but not to lending. I have been in mortgage lending for 30 years, and I love it, and it's my passion. I am a third generation banker, so it's completely in my blood and I love it. So American National Bank and Trust is a local bank. Our main bank is located in,
I'm going to move the slides forward.
Oh, sorry.
That's all right.
Can't see that down there.
Here, we have our quote for the day. It's the same quote you always get. The way to get started is to quit talking about and just doing it. According to Walt Disney, so y'all be like Disney and go do it. Oops. Okay, this is our agenda for today. Just a little quick for y'all. Okay, now here, this is who they are.
Yeah, so our main branch is in Wichita Falls. The bank has been in business for 40 years. And just in my branch, there's 3 other lenders with me, and together we have over 85 years experience in mortgage lending. So if you have a question, we can definitely get it answered for you. We offer, even as a bank, several different loan programs. We have several different investors to where we can, help your client to get them in a loan that works for them and that's best for them. So that's pretty much it. And there's all of our lending on there, and we'll touch base on some of those.
Yeah. Okay, this is another slide from her. Tips for your clients.
I'm gonna
Okay,
grab my
she's gonna grab her notes here.
so I
We
don't
gotta
forget
switch
anything.
places.
Yeah.
Linnea?
So I think the biggest thing, and I'm sure you guys have experiences, is just educating your clients on what the expectations are when they, go to their lender. We want them to know, where is their credit at? Do they know where that is? If you've got somebody that says, oh, my credit card tells me I have a score in the 800s. Well, a lot of times that number may be skewed some. So the best way to do is go to, make sure they're going to that annual credit report. That's free. You can go to your local credit report agency and they can run a, what they call a consumer credit report. So it doesn't show as a hit on there, but it lets them know exactly what's happening. Maybe you have a first-time home buyer. They have no idea where their credit is. Let's do that first. Talk them through that. They may have an old collection out there that they have no idea for $5 that is killing their credit score. So just making sure that they know exactly where they stand credit-wise. And also make sure they've gone over their budget. I can approve somebody all day long, here's what we can do, but does this work in your life? We look at what they have to pay, their car, their credit cards. We don't look at life. You're going to have groceries. You're going to have, some people will have daycare. You've got your utilities. So that's something to make sure that they keep in mind when doing that. I don't like approving somebody at their max because one little thing can change everything for them and for your transaction. And once they have that set, then yeah, let's talk pre-qualification. I can do that anytime. We can do that pretty quickly. They can just apply online, get that information. We can run credit and do that pre-qual for them. Once they can get us their income documentation, we can do a pre-approval, obviously subject to your appraisal, title work, and anything issues like that. But at least, when they're looking and they present a contract to a seller, they've been to the bank, they're good to go. We just need to get that appraisal and title work done. And probably the biggest thing that we need to educate the clients and our borrowers is absolutely do not obtain any new credit at all once you get that approval. Because first of all, if they are on that upper end and all of a sudden they're buying a new car, they may not be approved. We do a soft hit 10 days before closing. That's going to be on there and that can stop the transaction. Don't let them go buy furniture until after the fact if they're using a credit card, because if we see something new or an inquiry, we're going to ask about that. The underwriters will ask about it. And if they've got something, we're going to have to put a payment in on that. So no new credit, no new credit cards, no new cars, nothing. And don't use a credit card. If you've got a zero balance, don't use that, for during that time frame as well. So any questions on that? No? Okay.
Nope. You guys can always put stuff in the chat and we can see it there too if you have questions, or you raise your hand as we go through. Now, I'm going to kind of jump in and elaborate on this because especially some of our newer agents, don't be afraid, especially. Oh, Angelica's going to have a question. Okay, we'll come get you in a second. Give
me a second.
You're at the upper ends. If Tina tells you we're at the upper ends of their your ratios and they're going to be tight on this, don't be afraid to talk to your clients and say, hey, I don't know specifics because I don't want to know specifics. I never get into the financing with it. It's none of my business as far as I'm concerned. I just need to know that they qualify for a loan. And then I remind them, do not buy anything. I remind them all the things she just told you. And then I also ask them, you're at the upper end of your ratios, just in case something happens. Do you have an exit strategy? And don't be afraid to talk to them about that. What if something happens and one of them loses their job or something along those lines? Do you have an exit strategy in case of a bad situation? And talk to them about that. All right, we have a couple of questions. And Angelica, I know you had something. Oh, They can't hear me. Okay, I'll have to get closer when I talk. Sorry about that.
Yes, that was it.
Okay,
So
did you have another question, Angelica?
no. I
Nope.
just wanted to kind of make you
All right,
aware
we're
on my
gonna
end.
go on to the next one. Go ahead.
Can we touch base on the documentation really quick?
Yep.
If we can do that. Just a couple things too, to let them know, a lot of you may be aware of this as far as what documentation we're gonna need up front. In the past, we could just get the pay stubs and be good to go, and that's not the case anymore. Even if you're not self-employed, you're a W-2, we will require 2 years tax returns with all attachments. So W-2s, if you're a 1099, we need your 1099s, and obviously a 30-day pay stub. We'll need, at least 2 to 3 months bank statements. And a couple things like on child and alimony support, if you're receiving that, for Fannie Mae loans, we have to show proof of receive of income for at least 6 months. And on FHA, it's 12 months. So just something to keep in mind if that's something new for somebody, and we would need to see the full divorce decree. And then I think a lot of times through the state of Texas, it's through the child support department, and we can just get statements from them as well. We'll ask if they've had any recent credit inquiries in the last 30 days. We will ask the borrowers about that. And just remind them to be very quick to get any documentation requested from the lender as soon as possible, because a lot of times that can hold up underwriting. We can ask several times and we still don't have approval, and realtors are like, why? We're like, well, we're not getting the information from the borrowers. So something just to kind of put that in the back of their head, just to make sure they stay on top of it.
So you guys are the facilitators on that. So you need to be reminding your clients all the time that we still don't have this document or that document. So you need to stay on top of that and remind everybody. All right.
And so on this one here, as far as the difference between mortgage brokers versus banks, one of the things can be cost. With American National Bank and Trust, our fee on our secondary market loans, our government loans, we only charge $600, and that covers the underwriting and the processing fee. Everything else is third-party costs. So we try to keep that cost down as much as possible, because there's a lot to getting a home, and there's enough expenses on there already. So we do keep that low. We are very competitive with rates. Sometimes your mortgage brokers, that's how they're getting paid. That is, they're getting a spread on that, and that's what's happening. Nothing wrong with that, but that's where they're getting their funds. We can be very competitive. I can talk to my manager and be like, you know what, we really want to get this loan. Can we drop it at an eighth or a quarter or whatever that may be? And that's just a conversation, and that's it. There's no additional fees for that. We're not, so we can definitely do that. And again, you saw the loan programs before that we have. I do know mortgage brokers, they do have access to several different programs that we may not. But I do work with some mortgage brokers here in town to where we do some programs that they can't, and we work together with that. If you have a mortgage broker that you work with, that's awesome. And maybe they don't do land loans or construction loans, but they want the in loan at the end game. I'll work with that. I'll do that construction loan and not try to market to get that final loan on that. We'll just send it right back to them. All we need is a takeout letter, and we can handle that for them.
Yeah. While she mentioned construction loans, I'm going to have her elaborate on that, because construction loans are hard to get, and she can help out with those. They do those. Yeah. So go ahead and touch on that. She can help with commercial too.
Yeah. So the construction loans, basically we just want to get the plans and specifications from the builder. The builder does have to be approved with the title company. So a lot of times your local builders here are already on that list. We just have to make sure. If not, a lot of times that's just getting financials and having them answer some questions for the title company so we can get that approved. Once we get the report back from the appraiser, we will lend up to 85% of that appraised value. And then just set that up. We have a great program to where we actually have an app for our construction loans. So the borrower can see exactly, what's going out and staying on top of it as well, knowing exactly where their numbers are. So that's a great thing. We do have an additional fee on that as far as a $400 inspection fee, because we do go out and inspect the property, and we do have a 1% origination fee on that, because construction loans are very time consuming, and so there is some additional cost with that.
Yeah, it's very rare to find a lender that can do it. Brian has a question.
If you have a buyer that wants to buy land, 11 acres, do y'all finance the land knowing that there's going to be a house built?
It depends on what they're doing. So if that's part of the purchase with their contractor, that's in the loan,
Okay.
But we do land loans as well. So maybe they're buying the land now and building in 2 years.
I know Point Bank, they had a seminar last week, and they were saying that, they would make a land loan with a 2-year, within 2 years, a home had to be built. And,
Yeah.
and then they would want to then and then they would finance the house, and then they would then do a one-time roll into a mortgage.
Yeah, we don't require, there's no time frame on the land loan. So they
Okay.
can have the land for 5 years.
Okay.
Maybe it's just farmland, recreational land. We'll do that as well. So
If they want to flip it, whatever they want to do.
whatever they want to do.
Okay.
Yeah, so we can certainly do that.
Okay.
Great question. Thanks, Brian.
That's the best thing about your community banks. We're going to do those things,
Okay.
we're going to help with that. Mhm.
For land loans, how much?
We 85%, so 15% down. Mhm.
Yeah, she was asking the loan ratios there. It's 85%
the
is what the
max we'll
loan,
do.
it's max they'll do.
Thank you.
Yeah.
Is there a minimum or a maximum that you'll loan on as far as acres?
Ours is really the loan amount,
Okay, what would be
so.
I guess.
So our max loan amount is $1 million for our in-house.
Okay.
Anything above that, we can do, but then that's when I have to go to the board with it.
Got it. Okay. So
Mhm.
if I find a piece of land, as long as I'm under $1 million, we're probably in the ballpark.
Yeah.
Without having to go
Without,
a board
a
approval.
board approval,
Okay.
we can do that.
Okay.
And a lot of times also, yeah, exactly. With your construction loans, maybe you own a farm and you want to build on part of it. Well, if we're going to go secondary market with that, we will have to survey that part of that acreage out,
Okay.
because,
Just in case you have to repossess it.
well, true, but also with Fannie Mae, they only want the land to be 30% value. 20 or 30%
Yeah.
of that. So you have to watch out. We don't want our land value being worth more than the house on secondary market if we go on the permanent.
Is it going to be specific to counties, or can you loan anywhere in Texas?
I can loan anywhere in Texas.
All right. All right, so that's good information.
30%.
So your land value cannot be more than 30% of the total appraised value. So if you have 50 acres and you build a 1,100 square foot house, that acreage is probably going to be worth more than that home. We can't do that if we sell it on the secondary market, if you want a fixed rate in the end game. So we would need to survey out
Oh, so
5 acres with the
Okay.
house for the appraisal.
Okay. All right. So that's why you.
Mhm, mhm.
All right,
Okay.
are we ready?
Any
So
other
that-
questions on
So
that?
then by then, it's a second tax parcel roughly.
It would, yes.
Yes.
Mhm.
Brian just went, ew.
I'll take it and tie that in ag. Don't you?
Yeah.
Okay, these are the types of lenders. I kind of threw this slide together just so y'all could kind of get an idea of the difference between them. You have your local banks and your trusts, which is what Tina is. You also have credit unions. Credit unions are overlooked quite a bit, but they can loan money for mortgages and various other things. And usually they have a pretty good rate. So don't be afraid to look into those and have your clients look into those. We also have mortgage lenders. And then the final category is going to be mortgage brokers. The brokers actually shop the rate and get the best rate out there. But if you're working with a local bank and they already have a best rate, then that's fine. It's just do your due diligence and your homework and make sure you know what your client is looking for. I'm hoping you guys can hear me. I'm not raising my voice very much, but that's kind of what we're talking about there. Those are the different lenders. And we talked about getting pre-qualified already a little bit, but make sure that you just get your, I don't take clients out to show properties unless I know that they have been pre-qualified or pre-approved. And if they have not, I just explain to them, I would not, the worst thing I could do as a real estate professional is to show you a house you cannot qualify for and you fall in love with it. So I need you to talk to a lender and get pre-qualified prior to us going out. So I'm not showing you a property that you can't afford. That's the best and easy way to explain it to them. And they go, oh yeah, that makes sense. And so don't be afraid to do that. But don't go, you're not a taxi service, don't go showing them out and that's approved or pre-qualified. Okay, and this is more on Tina here.
So, you know, when we moved into Denton, I definitely wanted to be working at a community bank. That was very important to me. I was born and raised in Jefferson City, Missouri. And like I said, I was third generation that worked at Central Bank. And so it was important to me to have a bank that is involved in the community and also allows me to be involved in the community. And American National Bank is letting me do that, and they're great to work with. And like I said, we have so much experience at the bank. We have our own underwriters on staff. So it's not somebody halfway across the country that does not know our market, does not know the DFW area. So they know what we're talking about, and we can have that conversation with them if we're not sometimes seen eye to eye, which happens every once in a while. So that is great. And again, if there's something that is not quite fitting your secondary market programs, we have several in-house that we just keep on our portfolio that we can offer them and work with them. And again, if they don't fit that quite right, it's a phone call to my manager and we have a discussion about it and look at the big picture and be like, yeah, this makes sense. Let's help these people out. So I really enjoy working there, and I think we can really help a lot of your clients with your needs, with their lending needs.
Perfect. All right, what's next on here? And the what, where, when, how of down payments. Oh, our favorite subject. Okay. Angelica, I can see you, so I'm going to pick on you. What classifies as a down payment? Give a definition of a down payment. Oh, come off mic, Angelica. Unmute yourself. What is
Okay.
the definition of a down payment?
What is the definition of a down payment?
Oh. Definition of a down payment.
Are you asking me?
Yeah.
A definition of a down payment is where your buyer or your client has money aside to either requested by the lender to put down payment. Nonetheless, a requirement from the lender of how much they are requested to put down for a loan.
Yep. It used to be considered good faith money, that type of thing.
Yes.
But basically it is the exchange of funds to purchase a property. And that's different from your earnest money. Your earnest money is totally separate from your down payment. Earnest money is paid up front that holds the property, and your down payment is paid as closing
Yes.
as part of the transaction. All right.
It's required to qualify for the loan, right? I mean, that's what it is, a qualification.
Yeah.
Correct.
And depending on what type of loan you have, your down payment's going to differ. So if you have an FHA loan, you're going to have 3.5% down, maybe 5% down. If you have a VA loan, if they qualify for as a veteran, it's a 0 down payment. And so just make sure that the lender's gone over options with them and put them in the best. There are also down payment assistance programs. I count on my lender that I partner with as my professional to talk about different programs with the client. I know the basics of them. I don't get into specifics because I am not the loan professional on this. I'm the real estate professional. They're talking about real estate. I can help them with that. When it comes to the loan, I count on my lender partners to be the person to go to on that. So make sure you have a good relationship with your lender partners and have them talk about all the specifics of it. You know, down payment assistance programs, they're starting to come back. We were without them for a while, but they're starting to come back now. Do you do a lot of down payment assistance, Tina?
I have not yet, but I know there's 3 specific ones, and I can send you guys some information if you want it, just to, you know, educate yourself a little bit on it. You know, there's some of them depend on income. You know, there have to be a low income customer for that. Some of them are true grants. Some of them will show up as like a second lien for 3 years on their property. As long as they're there for 3 years, they don't have to pay it back. So there's definitely different ones. And, you know, again, it is your lender's, you know, expertise to help them guide them if they need that. And also there are grants as well. A lot of cities offer them. So it's just a matter of, you know, where they're buying and looking that up to see if that's available to them as well.
Yeah, and USDA, which we haven't used lately, it's a rural product for rural locations. Little Elm used to be considered a USDA property. They're not anymore. But if you get up to like Pilot Point or Krugerville or some of those, you may still get into a USDA situation. And on those, the property has to qualify in addition to the client having to qualify. So your lender can research any and all of those, talk about any and all of those with your clients. But just be aware there are programs out there that can get in with 0 down payment. Oops, sorry, I went the wrong way.
And if you're marketing, you know, if you've got a home that you're trying to market in rural areas, you can go to the USDA site and just plug in the property. They'll let you know if that property qualifies for that program. It's very easy to do.
Yeah, okay, and this is just about closing costs. You know, closing costs are going to be the costs associated with the sale of property. You're going to have origination fees, you're going to have appraisals, you're going to have lender fees, you're going to have HOA transfers, fees, and you're going to have, sometimes they'll charge an HOA startup fee. It's basically just a nest egg for your HOA to have money in the kitty so they can collect from you. You're going to have your survey, your title costs, residential warranties, prorations of taxes, and all kinds of items. So those are what consists of closing costs. Now, who can pay for closing costs? It's going to depend on the loan product. But usually you can ask, and your lender can tell you what percentage you can ask for.
Fannie Mae, your secondary market, Fannie Mae, Freddie, the max the seller can contribute is 3% of that loan amount. And then FHA, you can go up to 6%, which is amazing. VA is 6%, and then in USDA, oh wait, VA is 4%, USDA is 6%. So there's definitely some funds available there for your buyers.
Yeah, so if you have any of those loan products, and you're getting ready to write an offer, make sure you touch base with your lender first and ask them, what's the maximum that I can ask the seller to contribute? And depending on the market, if you're in a buyer's market, ask for the max. You're in a seller's market, I probably wouldn't ask for much of anything. Or if you're in between, just ask for what you think you can get from your seller. The worst they can do is come back and counter offer or say no. So make sure that you know how much to ask for. Your lender's going to be the one to tell you that information. You're going to have, you know, like she said, VA is going to have one, FHA is going to have another. It just depends on the product and the market. So don't be afraid to ask for seller contributions. We haven't been doing that lately, but I think we're going to start seeing more and more of that. And help your clients out as much as you can. Oops, sorry, I keep hitting the wrong button here because I'm not in the right spot. Hang on. There we go. All right. Now, these are the types of loan. You're going to have a conventional loan. You're going to have FHA loan. You're going to have VA USDA loans. So your conventional loans are not backed by the government. So they don't have Fannie Mae, Freddie Mac approval on those. You're going to have a higher down payment on those. Your lender's your partner. Make sure you lean on your lender partner to make sure to get clarification in the right loan product. VA, Fannie, or FHA is going to be Fannie Mae, Freddie Mac backed products, lower down payment. The guidelines are more strict. Your ratios are tighter. What's the ratio now? 45% on?
It is, and the thing with FHA, you can have a score below 680 and still get it approved. Obviously, you're not going to get it approved if they're in the upper high DTI. So it just kind of depends on your client on exactly on the big picture on there, but FHA is not as tight as they used to be. So it's a little more user-friendly, I guess, if you want to say that.
And just for some of our newer agents that aren't familiar with some of the terms, DTI is your debt to income ratio. And that's what we're talking about when the ratios are tighter. They could go a maximum of 45% of their debt to income ratio. So that's what we're talking then. And again, rely on your lender expert to figure out the details on that. Your VA and USDA government backed, again, either low or no down payment, depending on the product. Those two are no down payments. And the guidelines are different for every one of these loan products. So property needs to qualify as well as the buyer. That's what we talked about already. And then rely on your lender partner as the expert. I see an underlying theme here. Rely on your lender partner. Okay, this is something we talked about the other day on one of the Waking Up to Win calls. Make sure it's important to know your current events and the trending news articles that are going on right now. Shuba had asked me the other day, let's see, which one is it? The high credit score borrowers are penalized under a new federal mortgage plan. She'd asked me about that specifically. John Drennan, 2 months ago, had sent us some information. I included it in one of my classes. It talked about their changed the categories for lending. It used to be 7, now it's 9. Is that right? There's 9 categories right now to get a loan rate. Now, if you used to have a 740 credit score under the new guidelines that took effect, I think 2 weeks ago, you are not getting as good of a rate right now because they've reclassified everyone. So if you had a 740, which was your best rate out there on interest, now if you go to qualify now, you may get a 0.5 point less, a 1/4 point less, an 1/8 point less. Here, I'm gonna have her, yeah.
Well, yes, they are changing what we call loan level price adjustments. So they look at your score, your credit score, and they look at where your loan to value is. Now, if you have a 740 or you're in the 700 credit score, you are not being charged more than if somebody has a credit score in 600. So that is very good to know. So what's happened, I brought our rate sheet just to kind of show this. So in November, if you were above 740 and you were at 80% or above, you were getting hit 1/4%. And now you are getting hit at 3.8, so 0.375 on that. So a little bit different. What you're seeing a big difference is when your lower credit scores, so the same one, so at 640, they were getting charged 3.25%. And now they're getting charged 2.5%. So what they've really done is brought that loan level price adjustment down on these lower credit scores to try to get that market for that, to get these people in homes. Yes, even with your higher scores, you're getting hit a little bit more than what you were in the past, for sure.
Well, and we looked it up and did our research, and that's what y'all need to do on these. The news is going to provide some sensational story about how you have a higher credit score and you're being penalized. It's not necessarily the case. I think it was a $250,000 loan. We're talking a difference of $40 per month. That's not a big difference. And so just make sure that you know the stories that are out there, know the talking points on them, know if it's a big difference or if it's just a small adjustment difference. You may be able to make that up some other way. That $40 a month, you might be able to make it up some other way. Maybe your loan origination fee is a little bit lower on this new product. You just need to know the talking points and make sure you're a resource and not a sales pitch. You need to break it down as simply as you can to people. And so it's not a sensational story. It's just, they've done this to allow more people to be able to purchase a home. And so you just kind of need to make sure that you're looking at that. And I changed slides without meaning to. But basically just know what is currently going on, know your talking points, and also make sure that you know locally what is happening. It's possible you could have a situation that locally isn't affecting us at all. I'm going to move some things here so I can kind of see better on my notes here. Real estate is cyclical. It always has been. It always will be. We move in cycles on this stuff. The consumer is always trying to time the market. I've got one right now that tried timing the market. It doesn't happen. There are certain conditions in the market, and you just need to ask them. If you need to buy or sell right now, that is totally fine. We just need to work with the conditions we have out there, the current conditions. We can't try to time anything. It doesn't work well. If you do, you're going to be disappointed, and just make sure that you have a full understanding. Set the stage up front with these people, and let them know what to expect. Set their expectations appropriately. Watch where things are going, and don't be afraid, or be aware of the market. Stay informed. Be aware of to address consumer concerns. If any of your clients have a concern about, everyone's doing doom and gloom right now. Oh, interest rates keep going up. Well, yeah, they are going up. However, 20, 30 years ago, we were in double digits on interest rates. So we're far better than what we were 20 or 30 years ago. Just make sure that you acknowledge their concern and explain it away in a in a good place. Your local market features may be different from what's happening nationally. Make sure you know your local market as well as the national market, and try to stay focused on what is currently happening in our area. They gave an example the other day that Arizona they were horribly affected by the iBuyers, the Zillows, all of those, when they were trying to sell everything on the internet and do home purchases. All of the what are the companies, Redfin and all of those, they got hit horribly in Arizona. They didn't get hit so well or so hard in other areas, but a lot of Arizona was their test market. And so parts of Arizona got hit really hard. The southern part around Phoenix got hit super hard, but up on the northern part and the western part and eastern part, they didn't get hit as hard on that. So just make sure you know your local market and how it's different from that national market. And just be prepared to have a couple talking points. Don't be afraid to do your research and due diligence and get out there and tell people what's happening. And give them an honest opinion. That's why they're hiring you. All right. Well, thank y'all. That's all I have for this. Did anybody have any additional questions? We've got Tina here, so please use her as a resource. I can go back and show you her contact information again if you need it. Let me go back. So if anybody needs to reach her. Oh, Shuba's got a question. She's asking about the amount to lock a loan.
We can lock it in right away, which is new to me.
Well,
Depends on the closing date. So depends on what their closing date is, and then we'll look at the pricing on that. So if we can do a 90-day lock, we can certainly do that. Yep.
Cool. Anyone else? Angelica, did you have anything? Monica? Ramon?
No.
Okay.
If you guys ever have any questions,
feel free to give me a call. And if your borrower just has questions and maybe they're not ready to buy, but just kind of wants to know about the process, they're looking maybe to buy in the next 6 to 12 months, I'd love to have that conversation with them.
Yeah, Craig, did you have any questions?
No, I think I'm good. Thank you.
Thank you
Mario?
very much. Great
Yeah, Mario, you
information.
came in late. Did you have anything? He may not be able to talk right now. But, oh, there he is.
Sorry. Can you hear me?
Okay, yep, we can hear you.
No, I'm good. Everything's good.
Okay, cool. Well, thank everybody, and I appreciate Miss Tina coming in and helping us out here and talking about this. She's going to be a really good local resource. The one that really excites me that she can offer is the new construction loans, because I have struggled over the years trying to find a lender that can help out with something like that. I don't get them frequently, but every once in a while I get somebody that wants to buy some land and build on it. And I never had a lender that could help with that. And so now we can. So that's really nice to have. And she can also help with any of your commercial needs. She can help with any needs. So don't be afraid to utilize her, to ask her questions. Here's her contact information, scan her QR code, get her in your phone. And thank you, Tina, for coming in.
Thank you so much for having me. I really appreciate it.
All right. Okay. See y'all later. Go out there and get some appointments. Brownie's not here today because he has 6 appointments scheduled. So go get some appointments. All right. See y'all soon.
Bye-bye, thanks.
Okay.
We have a lender in Roanoke